Good afternoon and welcome to BizTech's ASEAN Midday Market Watch. Our guest today is Vishnu Varathan, Head of Economics and Strategy at Mizuho Bank in Singapore. Vishnu, as always, great to have you on the Monday.
I insist, as always, it's my pleasure.
Now, let's take a look at crypto markets first and then regional markets and then get your insights. We'll start with Bitcoin, which is at 34,225. It's up. It's down 0.36%. Ethereum is at 2,098, down just under 5% at 4.93%. Bursa Malaysia is down 1.5%. SGX is down 1.15%. Over to regional markets, we've got the Nikkei, which is down 0.365%. The Shanghai Composite is down 0.22%. The Hang Seng is down 1.35%. The ASX 200 is down 1.76%. Rounding up the numbers, we've got the Kospi, which is down 1.02%. With a sea of red across the region, the Nikkei was briefly below 4%. What's causing this major upset in regional markets?
Well, I think markets already saw red despite the sea of red. And this was on Friday. So we had European equities down, we had the US markets down. And so we've got a confluence of factors at play. I mean, of course, we've got emergent risks with the Delta variant making itself felt across the Atlantic and in European countries. That's one, but that's not the core issue, that's peripheral.
Now, can you elaborate on that, Vishnu, the Delta variant?
Sure. I mean, so what has happened is you've got more COVID cases re-emerging and starting to flare up in some parts of Europe. So variably across France, Germany, Portugal in particular. It seems like across the English channel, so it's gone from the UK over, or at least it's hard to contain it there. That's one thing that's weighing on their mind, but I don't think that is behind the massive drops. The massive drops appear to be led by dollar strength. That's now beginning to be felt a lot more emphatically across the commodities, equities, and so there's a bit of a pare back and a reining in of the so-called reflation trades that I think constitute part of the circumspection around things. And also there are some spots of data emerging, not the least of which was China's data also coming out slightly softer. So the recovery so far, while there are some bright spots in certain areas, is not evenly and unequivocally continuing at a very robust pace.
Now, you talked about China. Data has not been as good, but this morning they announced that the interest rates for 1 year, the 1 year loan prime rate has been kept unchanged at 3.85%. Long-term 5-year rate is also at 4.65%, unchanged as well. What's concerning Chinese policymakers right now?
And that's a great question, Brian. And I think really the fact that rates are unchanged is a bit of a relief, because actually what's happening is with China, on one hand, you've got a recovery that appears on the surface to have led the world, but it's very uneven across sectors. And we see some very, very soft patches in consumption, whereas the policymakers, ironically and perversely, have to contend with frothy aspects of the market, including the property sector and certain asset market sectors, which means at the fringe, they appear to be leaning on tightening instead of easing further. So herein lies the policy dilemma and perhaps the perversion of it, which is more policy support may be needed broadly, but really China needs to rein in credit in quite a few of the sectors. And I think not the least of which the rising commodity prices globally also means that they're pulling back and they're holding back their own state-owned enterprises from investing or speculating in commodities as well. So there's this cacophony of signals. Markets are reading it as credit tightening at a time when China cannot afford it, whereas what China is trying to convey is that they are trying to calibrate credit. Calibration is never well understood by the markets, and I think this will lead to some stress. Very specifically, the property segment in the credit space, the bond space in China, that's facing a lot of stress now because of the tightening, and the rollover risks could inadvertently spill over as financial market shocks in Asia. I think that's also a risk that markets are keeping an eye on.
Now, I want to zoom in and put Malaysia under the microscope today. Now, what are foreign investors' views on Malaysia right now, especially after the announcement of the four-phase national recovery plan?
I think there is a driving home of the of the narrative that it is going to be a bumpier with a capital B recovery in Malaysia. And I think that has got a few phases to it. One is really a containment phase, the ability to contain the outbreak currently. Secondly, is getting vaccinations up to speed. And in the meanwhile, I think it's not helpful that commodity markets are facing a bit more of a volatile right than earlier expected, which means that also feeds into Malaysia's exposure, so on and so forth. The real thing that's getting to foreign investors right now is not just the COVID exit plan, but the political risks surrounding it and underlining it. And that means that it may be back-to-back risks.
So is that a bigger concern?
It'll be hard to size up at this point whether it's a bigger concern, but it certainly isn't a consolation that we cannot extricate one from the other. And I think that remains one of the big, one of the big bugbears. Whereas really the fundamental views, Malaysia is actually in a much better place. The vaccine procurement is much better than any, in many of the other ASEAN countries. It's also, positioned to also benefit from the exports pickup that we expect. So on many fronts, fundamentally, it's well positioned. It's just the COVID outbreak and the political uncertainty that surrounds it is, I think, painting it in a much dimmer light at this moment.
Now, final question, Vishnu. We're in the beginning of the week. What are the key data points and events we should look out for this week that will move markets?
Whatever has not been telegraphed. And let me explain that point, because we have got BSP, so the Philippine Central Bank, we've got BOT, the Thai Central Bank coming out. We've got a third read of US data, which is going to be as interesting as peeling your navel. And the other things that are backward looking. What really I think would be of interest to the market is what the Fed says if they deem that markets have really pushed this hawkish interpretation, misinterpretation if you must, too far. So I think what's unexpected, what comes out without being telegraphed, that's going to be really important. The muffled elephant in the room, so to speak.
Now, Vishnu, as always, thank you very much for your entertaining insights.
My pleasure, Brian.
Now, we've been speaking to Vishnu Varathan, Head of Economics and Strategy at Mizuho Bank. On BizNext Asian Midday Market Watch, I'm Brian Fernandez. Check out our website as well as our Facebook and LinkedIn pages. Please like and subscribe to them. Thank you very much for tuning in.